Some more Secret Wars. Still haven't gotten to the bottom of it yet, and I have more questions that arise every time I answer one. And right now, I don't know why. I just had I just wanted to look at an index because all these charts I've been looking at with classical charting principles, with implied measure moves. Once the target is reached, after that, I kind of forget about it or have to wait till the chart morphs, more candles added. And Stan is good for stages. Stage 1, consolidation, accumulation. Stage 2, the rise. Stage 3, another consolidation phase or a topping action. And stage 4. So right now I have my Canadian tsx index, and I just want to see how it behaved with Stan Weinstein's framework. The only thing I don't have is volume. So for the breakouts, we'll have to assume that there was volume on the breakouts. But other than that, let's just go back in time. What I'm going to do, and I'll be a little less severe, and we're just going to look at the stages and see how they would have panned out. Right now, this seems to have been a stage 1 right here. This is the launching formation. Very nice. So what do we have? We had the breakout. We had the breakout candle. Could have been this one or this one or this one. Not sure. Depends which one had the volume. Above resistance, important resistance. Above moving average going upwards. And how does that RSI look like? RSI is above 0 and going upwards. So not the triple confirmation because I don't have the volume, but close enough. So what would happen? We'd have entered stage 2, going all the way up, and you notice that there's no 7% pullback. It's been going up, 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 up. I have my zigzag lines right here set at 7% pullback, and there's no correction that would have made me, as a trader, pull my sell stops back. What I do have that's been right here. There's an important trend line that was formed right about here. So how many? 1, 2, 3. It would have taken half your position right here at the break, like almost at the top. And you would have taken the remainder if you're a trader. If you didn't move your sell stop. Okay, let's do it like I used to. Okay, well, breakout candle. Let's not be greedy. Let's say the breakout candle's here. 4 to 6% under the breakout line is, and under a round number, is our sell stop as a trader. So I don't know where it'd be. I'd have to take out my calculator. Let's say it would be here. Investors trailing sell stop under the pattern, launching pattern, so it would be all the way down here. If you dare clarify this as your launching pattern. Price moves up, pull back, go back up, but not 7%. So traders don't take that into account. Does investor way, do we have to move it up? All right, there, another question. Investors, they move up their sell stop when there's a pullback and a move back up, and then we would have moved it under here. But right now, there's no 7% pullback. So the price keeps going up. And investors, that's just crazy. telling me that the investors, I wouldn't have moved up my sell stop. Okay, let's follow it that way. Pull back, move back up. True. Okay, well, let's do it this way. Investors pull back up, and then the previous podcast episode, Secretwars, you don't move your sell stop back until the price action has really bounced off the correction and is well on its way to previous highs. And I think I haven't found the exact text in Stan's book, but I'm gonna say 3/4 of the way. If the price action manages to go 3/4 of the way, close to the top, then that's enough to say that this is a good place to put our sell stop. So investors would have had their sell stops put here. And so half of our position, traders or investors, trend line. So right here at this, really at the top almost, we'd have our position both out. Traders, the 30-week moving average is touched. You don't even think about it. You dump the rest that you have. So the other half would have been taken out here. The trader's way would have been very profitable. And the investors, sell stop would have been here. And price action goes back up here. We're still in the trade. Oh, and I think we'll be out there. What's the low? 13,643, 13,712, 13,634, 43, 34. Yeah, would have been triggered out. I don't know if we would have put it behind. That's another question I have to write down. We put the sell stop below that high, below the low of the correction, the V, but we put it below a round number to give us a little bit more chances of not getting triggered out. That's another question I guess I'm going to have to answer after I rewatch this Secretwars episode. I'll tag that. So if we would have put it severely right there under, usually investors, the sell stop is under 30-week moving average, but because we're so deep below, it would have been triggered out right here. The investor's way sell stop, also remember that when you get towards the end, you move it as a trader's would. You would have put it under the V of a 7% correction, and you would have been triggered out. But I'm just wondering, this 7% on an index, because these values are so high, does that make a difference? Maybe not. Okay, I'll wait for you guys' feedback on that, or I'll answer my own questions of me thinking out loud. This is part of a process. My trading framework I have for classical charting, the way I put my buy stops and then my bracket orders and don't look at it until the end, that was refined like over years, 4, 5, 6 years. I came up with that. And now going back into Stan's framework and it's not my framework, it's like if I really want to respect the way he did it, then there's a little interpretation to do there. So I try to interpret it the best of my ability. That makes sense. And eventually, if there's no more interpretation to be done, if there's still answers unanswered by the book, and then that's when you start creating your own variant of a Stan's framework, whatever fits you. Like I had this idea today that maybe I should do it with the monthly candles. And how would that look like? So let me see. Oh, I created a Stan Weinstein monthly. And check it out. Here I have a monthly candles. Wow. Okay, let's remove. With a 10-week SMA. And how would I have played that, But I'm playing a little around with it. But right now, let's get back to Stan's way. So the trader's way back here went up, would have been an awesome ride. Oh, yeah. That is a huge risk to reward. Would have positioned here. Your sizing to equal 1% of your NAV. 1 to 1. 2 to 1. 3 to 1. Wow. 4 to 1. And almost in a half. So 4.5 to 1 reward to risk ratio. That is awesome. So that would have been very nice. So what happens here when the investors get triggered out, when the traders get triggered out, most likely the 30-week moving average is starting to flatten out. And if it starts flattening out, that means you're in a stage 3. So that's what happened. Right now, this is we had our stage 3. It could be continuation to stage 4, to another continue stage 2, or go down stage 4. Well, that's when you would have put your alerts, you would have started drawing your lines, and you would have waited. Remember, stage 4 to enter. There's no volume confirmation, so it's not a triple confirmation. It's a double confirmation. Fear is the confirmation for the downside. This could have probably been your top pattern. I would look for the RSI passing over from over the midway point and going downwards. So it's about here. So these candles here, one of these two below 3-week move average. This is probably your breakdown. Maybe this one here. Would have put your sell stop 4 to 5% above, and above a round number. So you would have been protected maybe against this one here. The high of 14,995 would have probably had your sell stop at 1,500. Let's just do the math, see if it would have still been good. So what did I say? It would enter. Oh no, it's right here, this candle here. Okay, enter this candle, but the breakdown line is 14,760. 14,760 times, yeah, 1560 would have been right above that line. All right, so you would have went down, pull back, then on the way back, trader sell stop, investors. Their trend line. One, two. Not super. Well, yeah, it's a nice trend line. There's multiple points here touching it. So what would have happened here? On the breach, on the way back up, traders half of your position, and when you reach touch here, the 30-week moving traders out, investors, your sell stop is still up here. You would have taken half of your position on the trend line break, and the other half position, you would have been triggered out all the way back here. That is not very good. So you have to figure out. It's subtle. It's very like Stan says, the traders, investors' way of selling stops. When you get close to the end, when the 3-week moving average stops, you start moving it as a trader would. Does that mean that the investor, when there's a breach of the 30-week moving average, towards the end, the investor bails? I think that would make sense. That would be maybe a more adapted way of doing things than waiting out. Your trader's completely out, the trend line's been violated, and you wait out to have a pullback all the way back to almost your initial position. That's a little inverse of how Stan built his trading framework. He really believed that you shouldn't leave money on the table, and his trading framework, moving his trailing sell stops manually, is built to leave the least amount of money possible on the table. So that's definitely a question I need to answer, and that would it would come in handy here, because on the TSX index you see with these big values, I didn't have a lot of 7% pullbacks, corrections, and my investors never moved their sell stop, which is kind of scary. All right, I'll get back to that, but I just want to see how the stages worked out. Stage 2, Stage 3, Stage 4, another Stage 1 here. When you get triggered out, that means Stage 1. And would have liked to have volume, but that Stage 1 didn't seem to last a long time. And I think the breakout candle's right here. This one right here, above resistance. How's that? RSI. Whoa. This one here. Going upwards above 50 and 30 week, above moving through the 30-week moving average, going upwards. It's all good. Enter here. Sell stop for investors below the pattern. And what is it? This one here? That's crazy. Okay, investors have been here, and traders 4 to 5% below this line, below a round number. So I don't know where it's going to be. Maybe here. I would have to calculate that. Remember, Stan also had the swing move. So if I spot a swing move, I put it here. And that's another place where you could put your target. We take half of your position when the swing rule is hit. Is there another swing rule here? Here it is. I think swing moves is on the double bottoms and on head and shoulder bottoms or tops that Stan talked about using it. So since it's not one of those two type of formations, I'm not going to use a swing rule here. All right, practice action goes up. No, 7% pullback. That's just nuts. It's just nuts. But we're always above the 30-week moving average. Sell stop has never been moved. Do we have 3 points? 1, 2, 3, 4, and break here. Traders, half your position out here, half your position here when you break a 30-week moving average. Investors, half out here when you break the trend line. And if I want to try to see if my new reasoning, my new rule, how I interpret Stan's work, if the 30-week moving average starts slowing down, I do it the trader's way. So I'll adapt. Investors, I'll also bail out here at the same time here. That would kind of make sense, knowing that you never move your sell stop up. I don't see the reason to stay in. That's going to be one of my premises, and if unanswered, I will stick to it. And that made us have the most profitable move. The profit arrow. Half here, half there. So I'll just put it a little in between. And here's my risk, which is 1% of my NAV. I would have done my sizing accordingly. Add that on top. Boop, boop, boop. 1, 2. TSX is a very nice candidate for Stan Weinstein stages. Once I could either I or not that. Not a lot of scary pullbacks during the run. 1, 2, 3. So about 3 3.25 reward for one risk. That is pretty sweet. What does that mean again when we're out? that means that we're in a stage 3. Stage 3 could become stage 2, continuation, or stage 4. Until we're there, all we can do is start drawing our borders and see if there's a launching pattern. Right now, I see we can't seem to be going above 30-week moving average. I might have a launching pattern to go down maybe here. We'll see how that pans out. I have to wait for more arrows here, and maybe eventually we'll just have to see how the pattern morphs. But right now, the TSX, there's no signs of a continuation move yet. Continuation move, what do we need? We need a breakout above important resistance line. Could be here, or if this pattern, the current pattern, if we keep adding weekly candles, then maybe that's going to become the more important breakout line. But we want it to be above the 30-week moving average, like we had here. Not under here, above here, and here we're above. The pattern could be, the 30-week moving average could be in between, so maybe we'll have candles going up here, 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 and after that a breakout candle going above here, and that'd be totally fine. So right now we're under. I would not play this to the upside. And the 30-week moving average and the RSI is, we'd have to wait for another side to go over the midway point and going upwards. We're not there yet. So we have to wait a few more candles. RSI is going to morph also with it, and we'll see where we're there, where we are with that. And the reason here I didn't declare this a stage 4 breakdown is the 30-week moving average is still going upwards. So you want to be flat or going downwards and break down below an important pattern, and we don't have that yet. All right, that's it for TSX index. Damn, more questions, man. But that's how you get better at something, right? You have to keep answering those questions until you've got 95% of it down. All right, guys, I'll let you go, man. I'm having a hard time keeping these under 20 minutes, but that information, that practice has to go out. I'm sure that you could probably find some similitudes with the way you've been applying stage analysis. And good luck, guys. All right. Take care and see ya soon.